Hello friends, welcome to Pro Trading Zone. So today was the option expiry for the weekly as well as the monthly. So the April session has ended and it was a ballistic ending for us as well. We made good profit today of approximately 2,20,000 rupees on our trade. We had a view that market could go on either of the direction, but we had an understanding that it is an expiry. If it goes for sideways for long enough period of time, we are going to make good money. So let's go into understanding which pivot points we took and why we took it. So today market opened just a little bit up, or we can say on the sideways, and just a little bit up or on sideways, or we can say that market was going on the sideways as soon as it opened, because the difference between the top of the day and when we exited was almost nil, and it didn't move on the downside more than 150 points. So more important point about here is that the market follows the zone trading rule. So first we will look into the pivot points and I will give you a brief example why we follow the zone trading rules. So the pivot points we chose today was 36,411, 36,273, 36,106, 35,971, 35,941, 35,808. So these were the points we considered that market would be going around, and these pivot points are taken based on what the price action has happened in the past day, month or weekly, and what chart patterns were forming over there was also considered, and this has served really well for us. So I will give you an understanding what is zone trading and why I have plotted this important pivot points as a zone trading. So zone trading basically means that you put up a non-directional trade. Like you can see over here, we have put up a short straddle and strangle at 936, and we believe that if market is between the pivot point of 36,273 and 35,874, we will be okay, that market will go up and down in this range only, and if it escapes this range, we would be taking a directional trade into it and doing some adjustment. So this is the basic premise of zone trading, and if you see that how successful it is successful almost the time you follow the zone trading rule. The only time it fails is that it goes out and it comes back again when you have just taken up a trade. That is, if you take trade over here and next candle goes down and it goes up again, you have to exit your put short position here and you are left with call short position. As soon as it goes up again over here, you have to escape your put short position. This creates a nuisance only, but the loss that will come to you will not be more than 0.7% of your portfolio or the trade that you have taken. So when we take this kind of zone trading trades, we do not take any other consideration. That is, even though this big candle has formed over here, I didn't take any trades considering that market would be going down until and unless this pivot point is breached properly. And you can see that immediately in the same candle market went up, then it started coming down, but it again took a support on our pivot point and it went up, and we exited our trade only and only when we had a good profit of more than 7.7% on our portfolio, and we made good money on it. One more thing that you have to understand is that even though there are good candle patterns or chart patterns, and if you see that there is a reversal and it is going up, and you can see that market has went really good on the upper side, that is approximately 400 points from bottom to top, we do not take trade over there. The simple reason is that if market would have turned around here and came down here, we would have made good money, but the daily target that we keep is approximately zero point 0.7 as the minimum to take home profit, as a take home profit. So this is zone trading. Now we will see what happened in our trade. So today we took a trade at 936. So we have put our strategy at this candle point, that is approximately 936, and we have put up short straddle and short strangle, and the pivot point for adjustment are 36,273 and 35,874. If the market exits these points, we are gonna take an adjustment trade. So in short straddle we have put in 36,000 call and put short, and currently we are looking at 2,625 profit, that is 0.2%. In short strangle we are looking at a 36,000 put short and 36,200 call short. Currently we are looking at 6,500 profit, that is 0.04%. That was short straddle of 36,100 call short and short straddle of 36,200 call short and 36,000 put short. So when we took our trade over here, our belief was that market would be going on the sideways and will be between the pivot points over here. So what is the importance of pivot point? You can see there was a huge candle that formed, but it took a reversal from there itself in the same candle, and we didn't do any adjustment over here as it did not breach our important pivot points on this level. So this is the power of the pivot points with zone trading rules. So once we didn't do anything over here, market steadily went up and we escaped the market, or we exited the market once we got the confirmation that market would be going up and it is enough profit for us for the day. We do not consider that it is a expiry today, option expiry today, and we have to make a big amount of money. For us, the daily profit is 0.7 as the baseline. If we make less than that, it's okay, but we will sit up to at least 0.7% when it is in the zone. If it tries to go out of the zone or there is a strong trend, we are very happy, because in strong trend, let's say market just went big candle over here, we would have escaped our call short position over here, and again there was a big candle over here, we would have made ample of money in our put short position, and when it started coming down over here, we would have escaped our put short position itself. So we would have made good money in delta, in the theta movement, and as soon as there is a delta movement, we would have made good money from here to here for the delta movement that has happened in the market. So this is the power of zone trading. This is true if the market goes down, this is true if the market goes up. So we exited over here with, so we have put in our strategy of short strangle and short straddle at 9:36 candle, and right now we have spent more than 2.5 hours, and right now we are looking at a good profit in short straddle and strangle. We are going to book our profit and exit all our trades. In short straddle we are making profit of 1,35,250, that is 0.83%. In short strangle we are booking a profit of 1,19,625, that is 0.75%. So we are booking our profit and exiting all our trades for the day, approximately 0.7%. And once we exit, we do not care if market goes sideways or market goes up or it is making new high, nothing. For us it is important that we follow our rules diligently, as these rules are helping us to make profit consistently. Not necessarily a very big profit, but there are only three possibilities while doing zone trading. One, you make a small loss. Second, that you make a small profit. And third, that you make a big profit. There is only three possibilities if you follow zone trading. You do not make a big loss in zone trading, because the loss side that comes over here is capped by these pivot points. These pivot points do not let you take a big loss if you escape the position. That is, if it goes down, you escape the put short position, and if it goes up, you escape the call short position. So the loss making trade is exited and the profit making trade is kept over there. So this is the zone trading and the trade that we took. Now we will just look at the chart patterns that would have made sense if we would have been a directional trader. But while doing directional trading, we follow zone trading rules to understand how we should take a trade. So generally we do not take a trade until and unless it escapes our both the sides, that is upper pivot point and lower pivot point. Only then we take a directional trade, and we suggest a directional player to take a trade in that condition only. But if there is a good way to make money or good way to make money within the zone, we will suggest only if you have high conviction, because most of the time the market will go in this fashion. You would be thinking that you would be making money from here to here just because you are looking at the market when market has finished making candles. But in live market, it is very it is not very possible. It is not possible every time to understand exactly where you would be making. If you could see this thing, this was a formation of chart pattern which shows cup and handle, and market should have gone down and it was in the zone. So if you would have taken a downward trade, you would have made a massive loss over here. So that's why we do not suggest to take a trade in the within the zone. But if you consider a trade over here, from here to here, you would have made ample of money, that is approximately 400 points in the trade. But how would you determine this? This is not something you can see when market is running. So what we suggest is to follow this indicator, which is VWAP with standard deviation of 1 in the green on the upper side, standard deviation of in the green on the lower side, and we use the pivot points that we have drawn to take a trade. So for us to take a trade, we would have considered this to be an important point because it was a reversal, but as it the green was on the downside and market was going up, this was not something I would suggest to take your trade, even though it feels right now. But in the live market, I wouldn't suggest to take a trade over here at all. According to the zone trading rule, it is not a necessity for you to take trade that you see in the market after that candles are made and all the market has closed. In real market, you do not know how to take a trade. So if you follow the rules properly, you can make ample of amount of money, and you only need one or two trades that will make you excellent amount of money, which is high probability trades. So just to make an understanding how we would have traded, if in the simplest format, if I would have to consider to take a trade, I would have taken a trade when there is a retracement while touching the pivot point again. I would have taken my trade over here. That would have been uh, buying the call of next expiry, or I would have shorted put. I would have shorted the put. And this would have given me the theta decay that happens when the market goes sideways. But for me, most of the time I will take a short position just because I know that if market goes sideways, I would be making good money even though market is not giving any movement. When I buy a call, I have to believe that, or I have to see market going on the trending upside, then only I will make money. But in call short, I would be making money on the sideways and as well as when it goes up. So this is the basic thing that I would have done, and this was the simplest setup that I would have suggested while taking zone trading rules, and I would have escaped or exited my trade when I saw a red candle coming back over here and touching the pivot point. This was my exit point and the simplest trade that you would have taken using the zone trading rules for directional movement. Second trade that I would have suggested is that when market came down over here, I would have considered is to be as a retracement. And one more bonus of VWAP was that one standard deviation was coinciding with the pivot point, and this was a reversal or retest over here. Again there was a retest, but eventually it started going up. So I would have initiated my trade here itself. If I was a directional trader and let market run on the upside. So I would have taken a call position over here, or I would have taken a short position for put over here, and it would have made good money for us because from here until and unless the market would have again touched our green point over here, I would have kept my position it like that itself. I could have referred over here and exited here or in this path, but generally when I take a green one standard deviation green path, or it as a trend line, I only exit the market when it again touches the green line again. So this indicator is very useful when you consider the market is trending and you don't have to draw any of the trend lines by yourself. This acts as a trend line. It gives you when to enter and when to exit. So here we just understood that our pivot point was breached. There was a green line, one standard deviation of VWAP that was crossed. It took a support on the pivot point and it started going up. And the only exit that I suggest is that when it again touches the green part, it is okay that you would have gone up and exited over here once again. You would have also exited over here also. But you have to follow only one rule, is that once you have initiated your trade, that is good trade initiation, you either choose the pivot point exit or you choose the green point exit. You could have exited over here, 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 or you would have just chosen that I will only exit when it touched the green part again. This is a very high probability trade. You would have made approximately 300 points easily onto it without any worries where to enter, where to exit, or your trend line is good. So that's it for today, and that is for the zone trading rules and how we take our trade in Bank Nifty. We take a lot of trades in Bank Nifty every day. We take at least one trade just because we know that when you follow a setup for a very long period of time, the probability of you making good money increases dramatically. That's why we take only one trade, one counter, that is Bank Nifty, and we take trade in it again and again and we make good profit into it. I am going to come up with the profit statement that I have been making this month. What exactly is my profit? You could take a look what profit I am making by going in the shorts of the channel and look for booked profit. Every day I post live shorts which shows which trade I am taking and where I am exiting my trade and how much money I am making every day in the live session. So you could take a look into what is my market view, what is the assumption of mine, where to take a trade, where to exit the trade, where is the adjustment, what is my market view right now in the market. You can get all that by following and subscribing to the Pro Trading Zone channel and looking for the shorts in the live trading session. So that's it for today. Please like, share, subscribe, share with a friend who would like to learn a new way of doing trade where you are not worried about the outcome or the direction of the market. You do not do any initial understanding of market where it would be opening or closing. The only thing that you're worried is that you follow the zone trading rules and you are okay with it. The market goes up, you make money. Market goes down, you make money. Market goes sideways, you make money, and you are not worried towards the direction of the market. So that's it for today. Thank you.